Organization for Economic Cooperation and Development has lowered its economic growth forecast for the Philippines from its initial projection of 6.7% for 2018 and 2019. It is now at 6.4% for 2018 and 6.5% for 2019. Here to discuss the implications of this forecast, we have reporter EJ Tubayan live from BusinessWorld. EJ, we're leading off with lower forecasts, but the OECD did say the Philippines actually has been able to sustain a good performance. What factors were worth highlighting for them?
Well, the OECD noted that we still have strong domestic demand, and they've cited the importance of strong remittances over the past years. And we have the weak peso currently, so that's actually boosting or increasing the value of these dollar remittances, which supports household spending. So they see that actually sustaining for more years, which is actually a solid base for economic growth, despite challenges such as high inflation and external uncertainties, such as the US-China trade war and the global tightening of monetary conditions that led to fund outflows from emerging markets. Robbie?
Okay, so that refers to the silver lining here, but we talked about the adjustment downwards of the projections. What are the challenges that the OECD expect for 2019?
Well, they highlighted a key policy challenge for the BPO industry and how they will cope up with rising risks of automation. Now, we know that the BPO industry actually employ over 500,000 Filipinos, and 2/3 of them are actually in call centers. So, there's a big risk of these call center agents or those in the voice sector being automated by these artificial intelligence. But the extent of when it will happen and how much will be automated is still unclear, as currently these type of technologies are still expensive, and that BPO firms can actually use funds currently to improve training to more higher valued services, such as in the innovative and the creative sector. Robbie?
Okay, in the meantime, how else can the Philippines improve competitiveness and productivity? Again, according to OECD.
They highlighted the recent executive order to liberalize Philippine industries and open them up for more foreign ownership. So that actually boosts, that has a big potential to boost Philippine investments more, which is another solid economic growth source, and complement that with the ease of doing business law, which will streamline these new investments and immediately reflect them to our GDP growth in the near to long term. Robbie?
Okay, salamat EJ. That was BusinessWorld's EJ Tubayan live from Quezon City.